What if I told you there was a pattern, used by professional traders for nearly a century, that's designed to do one thing: find the exact spots where a market is most likely to reverse? A pattern that combines Fibonacci ratios, market structure, and pure price action to give you high probability, buy low, sell high entries. That pattern is the Gartley. Welcome back, traders. In today's masterclass, we're not just scratching the surface. We're diving deep into the legendary Gartley Harmonic pattern. By the end of this video, you'll know exactly how to identify it, validate it, and trade it with precision. This is the one pattern you need to add to your arsenal. What is the Gartley? The holy grail of harmonic patterns. First, a little history. The Gartley pattern was introduced by H.M. Gartley in his 1935 book, Profits in the Stock Market. But it was Scott Carney and other harmonic traders later who supercharged it with Fibonacci ratios. At its core, the Gartley is a reversal pattern. It identifies a potential exhaustion point in a trend, where the old trend pauses and a new counter-trend move begins. It's most famous for its 222 setup, but we'll get to that. Think of it as the market taking 2 steps forward, X to A, 1 step back, A to B, a smaller step forward again, B to C, and finally, a retreat to a precise, predetermined zone, C to D, where we look to enter. That D point is our trade trigger. The magic isn't in the lines, it's in the Fibonacci ratios between those legs. This is what transforms a simple zigzag into a high-probability harmonic pattern. Anatomy of the pattern, the must-know ratios. Let's build this, step by step. There are 2 main types: bullish Gartley at the bottom of a downtrend, and bearish Gartley at the top of an uptrend. We'll focus on the bullish one. 1. Leg XA. This is the initial, strong, impulsive move. It sets the stage. 2. Leg AB, the retracement. For a valid Gartley, point B must retrace to approximately the 61.8% Fibonacci level of the XA leg. This is our first critical ratio. 3. Leg BC. This is a counter retracement. Point C should retrace to either the 38.2% or 88.6% Fibonacci level of the AB leg. The 61.8% is also common. 4. Leg CD, the final and most important leg. This is the entry zone. Point D must be an extension of the XA leg, specifically at the 127.2% or 161.8% extension, and, simultaneously, a retracement of the BC leg, ideally at the 78.6% level. See this zone where these 2 Fibonacci clusters overlap? That is the potential reversal zone, PRZ. This confluence is what gives the Gartley its power. It's not a single price, it's a zone of support or resistance created by multiple harmonic measurements. The master stroke, how to validate and trade it. Finding the pattern is only step 1. The pro move is validation and execution. Here's my 3-step checklist. Step 1. Pattern completion. Wait for price to actually reach the PRZ, point D. Don't anticipate. Patience is key. Step 2. Confluence and structure. Is the PRZ also aligning with a previous horizontal support resistance level, or a major moving average? The more confluence, the stronger the signal. Step 3. Price action confirmation. This is non-negotiable. We never just blindly buy at the D point. We wait for a bullish reversal candlestick pattern inside the PRZ. Think hammer, bullish engulfing, or a simple strong green candle closing above the zone. Trade strategy. Entry. On the close of the confirming bullish candle, or on a slight retest of the PRZ after the candle. Stop loss. Place just below the X point for a bullish Gartley. This invalidates the entire pattern if hit. Take profit 1, TP1, at point C, a logical first area of resistance. Take profit 2, TP2, at point A, the next major level. Take profit 3, TP3, at a further extension, e.g., 127.2% of CD leg, or manage trailing your stop. Risk to reward on this setup is often excellent because your stop is well defined and your first target is relatively close. Common pitfalls and pro tips. Before you go chart hunting, you must know the pitfalls. Ratio perfectionism. The ratios are guidelines, not laws. Look for the cluster, not exact numbers. A 59% retracement instead of 61.8% is okay. Trading isolated patterns. A Gartley in the middle of a ranging market is weak. A Gartley at a major swing high-low on the daily chart is strong. Always consider the higher time frame trend. Ignoring confirmation. I'll say it again. The candlestick confirmation is your trigger. No confirmation, no trade. Overcomplicating it. Start by looking for clear XA swings. The rest will follow. Pro tip: use the ABCD pattern as a building block. The Gartley is essentially an ABCD pattern, B, C, D, with an XA leg that provides the harmonic context. Let's do a quick 60-second scan. See this strong move down? That's our potential XA. Retraces to about 0.618? Check. BC moves to near 0.886? Check. Now, is price approaching that 127.2% extension of XA? Look at that. It's also the 78.6% of BC. PRZ is here. Now, we wait. We watch for a bullish candle. That is the disciplined Gartley trade. The Gartley pattern is a framework for patience and precision. It forces you to wait for the market to come to you, to a zone where mathematics and structure say reversal is likely. Your action step. Go to your charts this week and just label. Find old swings and practice drawing the X, A, B, C, and D points. Don't even think about trading it yet. Build the pattern recognition first. If this masterclass added value to your trading, do me a huge favor. Smash that like button, subscribe if you haven't, and hit the bell so you don't miss our next deep dive. We're breaking down the bat pattern next week. Comment below with the symbol and time frame where you found your best Gartley setup. Let's discuss. Until next time, trade smart, trade disciplined, and I'll see you in the next video. Cheers.